What's the next move for leading financial stocks and the XLF itself? We'll find out in tonight's video as we go into Friday and the week ahead. This is Coy Rosenblum, and you're watching the TheoTrade nightly video for February 28th, 2019. As we push into March, we're going to see key levels in play, key short sell opportunities or premium sells above the market, and any type of in-out spreads or bear put spreads that may be triggering currently in financials. First, we'll take a look at the broader XLF, and this 2650 is our key spot. It is an inflection point. Think of it like gravity off of 2018, multiple bounces. Once we broke through, it became a key level to watch and has been a target recently, and we're here. What we see on the far right side of the chart, again, we're back with our average true range. That's a helpful spot for stop losses, intraday tactics, and our implied volatility, both the percentile rank and the percentile itself. And of course, our probability of expiring. That's going to help us put on duration positions and thought process for what the next move might be. For example, low implied volatility, low average true range implies expansion is yet to come. That will favor option premium buyers. We're in a similar spot with financials here because the next move probably is a down move, but if that doesn't happen, we'll have our risk controlled for an upside break. That is the thought process going to each of these financial names. Low volatility, low average true range, and range contraction leads to a future breakout. And we prefer to play those with put strategies, particularly purchasing put plays. In-out spreads, maybe some butterflies down at lower levels, lower targets into the future, and of course, vertical spreads themselves. We'll start our journey tonight by looking at Goldman Sachs. The average true range does have a low for 2019 as price is pushing higher. Implied volatility is staying stable at, roughly speaking, the 0.25 level. That's going to put it roughly at the 26.5 percentile rank. So that's just, it's a lower part of the volatility band. Future could be an expansion play like any of these. Doesn't mean it will happen tomorrow or even next week. But for duration plays, that would be the preferred method. Goldman Sachs is up into resistance at 200 per share. So we will be looking for any type of downside reaction that takes us through these levels into the future, maybe as low as 180 going forward. Of course, that alternate thesis or unexpected play, that'd be if the S&P and the Nasdaq themselves burst and rally higher above 2,800 and the key levels in the Nasdaq too. That's going to take it maybe to 215 or at least 210 per share. If you are selling premium, let that be done above these levels. Bank of America, key spot remains 30 per share. It's going to be the pivot point from 2018, midpoint of the range, and we're back into it. So continue watching 30 per share for Bank of America. We're still going to be watching this as our low to high range. There's, roughly speaking, on the probability of expiring, a 50% chance that we end out March at this 31, 32 level, or 32 per share level, or down again to roughly 26. So that is going to be volatility as it exists now. But if we do see a downside move, both the average true range, our daily price bars like these, and the implied volatility will expand, as will premium for the puts. JP Morgan has a key pivot into the 106 per share level. Again, support level in 2018, midpoint of a range, and now in 2019, the high of the year. Low average true range, low implied volatility. In fact, percentile rank, 20%. That's going to suggest a push away from here. If that push away from here doesn't happen, then the alternate thesis takes it above 110 to about 112. And that can be done to, roughly speaking, the end of March, the last week thereof. The level that we're watching in Citigroup is 65 per share. Again, the same thing takes place, and that's when we look at stocks together as a group. You don't have to trade all these positions, maybe one or two, or just keep it on the XLF for your positions. Still, support levels in 2018, midpoint of a range at the end of 2018, and the high of the year into resistance. That again is 65 per share. Into the future, as we get into March, we can see our probability of expiring cone takes us out to about 58 or about 69.50. That on the chart would extend out this level and will extend to the right. That's about 68, almost 68.50, just about where we are looking for the future. That is the alternate thesis short squeeze pathway, just like that. Otherwise, bear plays are favored. For Wells Fargo, it's already downtrending. It's already weak from where it was at the middle and toward the end of 2018. So Wells Fargo is a weakness candidate. Still, its pivot point is $50.70. 2018, support, 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 and then resistance. To be clear, what are we looking for? Just to push away from these levels. What is the precedent for that? Earlier in 2019, where it pushed away from, roughly speaking, $50.50 to about $47. That was roughly a $3 move, and that's plenty to pick up on in-out spreads or even intraday tactics with options or the stock itself. So the thought process goes bullish if above here for an alternate thesis, roll, hedge, or otherwise take stops. But the dominant thesis does keep us going down in this trading range. Finally, Morgan Stanley comes up again because it has a low average true range. And it just means compression, consolidation. We can make that into a triangle if we want to, and just wait to play the breakout from the range. Nevertheless, its pivots point is going to be $42.50. Again, a low or narrow probability of expiring cone, low implied volatility, although if you look closely, we'll zoom in just for a moment, we can see that implied volatility creeping up a little bit as price goes sideways. That is something to watch. Of course, the ATR, which is our daily range, is low. So keep watching these stocks, financial names. They could lead the market. If they turn lower and the XLF turns lower, well, the market's going to go as well. If the opposite happens and stocks trade higher, frustrating as that might be, these probably trade higher with it. Trading is, at the end of the day, a numbers game of probability and putting on and managing open positions. But don't forget our TheoTrade Scottsdale live event. It's coming up in 90 days. 90 days exactly from tonight's video. And for details, information, registration, the schedule, all of that, it'll take place on May 30th, May 31st, and June 1st. Information is at TheoTrade.com/live. TheoTrade.com/live for our Scottsdale live trading conference. We'll hope to see you there. But as always, be safe, be careful, think risk first. And this is Corey Rosenblum with your Theo Nightly video for February 28th, 2019.